Hey folks, it's Monday, July 22nd. Welcome to the week ahead. I'm Chris Versace, Thematic's Chief Investment Officer, and I also run the Street's Pro Portfolio. We've got another full week ahead of us, but it's going to be one that's incrementally more interesting than we thought it was going to be on Friday. I say this because yesterday, Sunday, we learned that President Joe Biden has withdrawn from the 2024 presidential election and endorsed VP Harris for the top spot. Recent thinking was that candidate Trump would likely win the election, but now we're going to have to see how these events shake things up or not over the coming days and weeks. We could, from our thematic and targeted model perspective, see some volatility across our EV transition, nuclear, and uranium models, but we don't anticipate a lot of volatility or major disruptions across our Rebuilding America or our CHIPS Act models. However, as we move through the next 4 weeks or so, we are likely, like many others, are going to revisit, this outlook more than a few times, depending on how the polling goes and what increasingly concrete policies are put forward. But remember, before we kind of jump the gun here, we do have to remember that we have to see how the totality of the 2024 elections come out and see not just who wins the presidency, but also what is the outcome in Congress as well. Could be something that allows for easier policies to be passed, or it could be something that just says gridlock and nothing gets done. So again, we're going to have to kind of game things out as we go through the coming months, and we will. But back to this week, we are in a Fed blackout period ahead of the central bank's monetary policy meeting that concludes on July 31st. In other words, no monetary policy speakers this week. And as we come into the week, the CME FedWatch tool still shows the likelihood of 3 rate cuts this year. We continue to think that the market might be a little out over its skis on this one, but we will remain data dependent. And the GDP Now model shows now roughly 2.7% for the June quarter, up from about 1.5% to 2% earlier this month. Now, why is that important? Well, the market was kind of getting very excited that it was seeing weakening numbers for the economy, bad news being good news for rate cuts. But so to the extent that the market is wrong on this, or the economic data, I should say, shows that the economy continues to grow above trend, call it above 2%, 2.5% or higher, the market might have to rethink some of its expectations for rate cuts. But let's get to this week. We do have 3 key pieces of data coming at us. The first is going to be the flash July PMI data from S&P. We will also be getting the June PCE price index and the June personal income, personal spending data. What will we be looking for in all of this? One, further progress on inflation versus May. Did we get it? Specifically, did we get it in the core PCE price index? Second, does the July flash PMI data show the economy slowed entering the current quarter? Remember, the Atlanta GDP model, that 2.7% number that I mentioned, was for June. The flash July PMI data is the first real reading that we're going to get for the manufacturing and services economy for the month of July. So it's going to help to set that tone, and we will want to be comparing, contrasting implications from that flash July data against any other updates that we get from the Atlanta Fed GDP Now model for the June quarter. Inside the flash PMI data, we're also going to want to see what does it say about inflation, what does it say about employment, because those will be some leading indicators for some July data that we'll be getting very soon. And then lastly, taking a look at personal income, personal spending for June. What was the trend in real wage growth? Is it accelerating, decelerating? Implications abound, good or bad, for the consumer. And while the Fed's in a blackout period, we are moving into a higher gear for June quarter earnings. On Monday, in other words, later today, we will hear from SAP and NXP Semiconductor implications on AI and cloud, but also digital infrastructure as well from our model perspective. Tuesday Tuesday is going to be the big day because we have Tesla and Google reporting, and combined they are several percentage points, not only for the S&P 500, but also for the NASDAQ composite. So the day could be a little volatile depending on what these two have to say. Tuesday, we also have quarterly results from Lockheed Martin. Obviously that's going to be insightful for our safety and security model. Wednesday brings us AT&T, and we were interested in this one, not for what you might think. We're not really concerned about what they say regarding mobile subscriptions, growth or no growth, pricing, blah, blah, blah. What we really want to hear is management's take on the high-profile cyber attack that was recently announced and efforts by the management team to address it. This speaks to the heart of our cybersecurity model, and we continue to think that every investor should have exposure to cybersecurity. Wednesday, we also have KLA Corp, or CLAC as it's known, as well as United Rentals. What they have to say about the back half of the year will likely be supportive, in our view, for our CHIPS Act and Rebuilding America models. Thursday, we get to Comcast, Northrop Grumman, H&E Equipment, and Juniper, or from a model perspective, digital infrastructure, safety and security, Rebuilding America, and digital infrastructure. So we're going to get a lot of data points this week. Based on what we've seen thus far from other companies that have reported economic data and other ripped from the headline signals, we're not really expecting a lot of surprising news when it comes to the models and the companies that make them up or make up the strategy as they report this week. But I will say, please be sure to check back Tuesdays and Thursdays. Why? Because that's when we publish our other editions of Thematic Signals, including ripped from the headlines confirmation from our models. So be sure to check back for that, and we will see you again next Monday with another Week Ahead.